Okay, everyone, welcome back. My name is Kai Jun. So for those who are joining for the first time, I'm a second year student doing econs and finance. I've been investing for 5 years in as a fundamental investor. So I'm doing this out of my own passion to hopefully share what I know at the same time to learn from you guys as well. So just, you can treat it as like a sharing session. So a little disclaimer is I'm not a financial advisor. So whatever is going to be shared today through this webinar, would be for educational and entertainment purposes only. So if you would like to take further action, do your own due research. At the same time, if you would like to, you can seek the advice from your own respective financial advisor itself. So before we begin, a little, I would say a phrase for you would be beyond the scope of finance. I do hope everyone is looking beyond into their own personal investment as well. Finance is not everything. So yeah. Okay, before we begin on the main topic itself, what I want to touch on is current affairs, which I do on every single webinar, at the beginning of every single webinar itself. So to keep in touch with what's going on around the world. Yeah. So Southeast Asia is caught in the middle, in between the Cold War happening between US and China itself. So I will discuss on the three different issues among the many that is most notable and is critical for Southeast Asia itself. So let's look at, I would say, the likely indicator and the start of all the tension, which is the first one, the trade war, which is still ongoing, was a tit and tat over tariffs from both sides. So arguing based on the US trade deficits as well as the intellectual property intellectual property theft, which I mentioned during Global Affairs webinar itself. So the second would be the technological war that is still ongoing. We are looking at global dominance of the 5G network itself. So who is empowering and who is taking charge, etc. And for Singapore case, actually, we are looking at a part of Singapore implementing 5G network a portion by 2022 itself. So lastly will be the currency war over the exchange rate, the rate between the yuan dollar as well as the US dollar itself. So as we know, to a certain extent, China isn't exactly a full floating exchange rate. What this means is, to a certain extent, there is some intervention, and they have actually allowed the weakening of the yuan against the dollar. So this indirectly affects the export greatly, making China goods relatively cheaper and cheaper to get and more attractive for foreign investors as well. The second news I'd like to touch on would be the optimism over vaccine produce. I'm not a scientist here, but this will undoubtedly, have an social or psychological impact within the economy or in the global standpoint. So yes, it's a positive news amidst all the bad ones. However, unless there is a concrete result, I wouldn't want to bet too much and still remain, remain with maintain a conscious effort in terms of the economical outlook and stuff. So we would, we have to know that back then during the SARS issue, doesn't have its own vaccine yet at this point of time, and it takes on an average around 10 years or so to develop one. And most of the initial development of the vaccine has side effects to individual health. So if you guys want to find out more, or want to share more opinion, or want to discuss more on the current affairs, you can indicate in the chat box below. Then after that, we can do a little Q&A at the end of it. So moving on to the topic that we're going to discuss on today. So last week itself, Simply Start webinar, I've actually touched on savings accounts as well as to help kickstart a positive financial routine or habit. Additionally, discussing on credit and debit, the importance of credit score and why we should fully utilize it. And additionally, discussing on financial instruments as well as the vehicles out there. So for this week itself, I'll share with regards to the tools orienting around investment itself. So now assuming that you already have a CDP account that you have created, and now considering which brokerage you want to use out there, first world problem, right? Already too much. So I've actually I would say streamlined down to 5. I'm not saying these 5 is the best. So before you actually start opening, do your own research and see which really caters to your need, your goals, and everything. Yeah. So anyway, I'll be doing a comparison, between the brokerage under the same bank. And the reason for the different fees that you are going to see later, and this slide and the next slide, is which is clearly the difference between a custodian, account relying on custodian, and account relying on CDP itself. So as we can see here, except for DBS brokerage itself, utilizing custodian, you're enjoying a lower brokerage fee of $10. So I'll share about the CDP a bit in the next slide. So before that, you may want to ask, what is this prepaid thing? let me use the laser thingy. Okay, so you may want to ask, what is this prepaid thingy? So to put it simply, it acts like your Grab wallet, like an e-wallet. You want to place money in the account before purchasing your stock or whatever securities that you want to invest into, which limits to your trade itself, your trade balance. So depending on the account, for example, you want to put in 3,000, you can trade up to $3,000, for example. So this also means that the securities upon purchase will be held within the custodian account instead of the CDP, which I'll share a bit on it later. So this is the second one, similarly to what I shared earlier. Just to do a basic simple comparison. So comparing to the account on the previous slide, these are the accounts utilizing CDP, which demand a higher brokerage fees. So don't worry, I'll share about the difference between them and the pros and cons later. So in the case for Saxo, it's slightly different, as it's an international brokerage catering to investor around the world, thus holding your stocks that you purchase under the custodian itself. And of course, of these 5 that I have stated here, there is many more out there, such as OCBC Securities, TD Ameritrades, Fund Supermart, FSM1, Interactive Brokerage, iFast, etc. Okay, so now moving on to cover a bit more depth about the brokerage itself. So what is CDP? CDP is actually Central Depository Account itself, where we get to keep the stock which is purchased under your name, which entitle you to the rights of as a legal owner of the stock and a shareholder of the company itself. So what this means is you do get invitations to the AGM and a general meeting. Currently, all of them is held online because of the current situation. You do get voting rights, annual reports from the company itself, as well as news such as like such as the rights issues, as well as the share buyback, etc. So all the news relevant to the particular company, you do get them as a shareholder itself. So this also means, this will be the cons. This also means that there is additional fees, which I have listed below, such as like commission, trading, clearing fee, SGX trading fees and stuff, which is on top of the already higher brokerage fee of $25. So a little, in terms of layman term comparison wise, CDP, they act like a safe, as like a personal vault, where you keep the shares, or our custodian is where the shares you purchase is held under the brokerage itself. So could be another trust itself. So pros of utilizing a custodian is, like you've seen earlier, it offers a lower brokerage fee, $10.75. There's a $15 difference. So ability to invest overseas as well, as CDP is only catered to your local market. So whatever stocks you bought within SGX market can only be kept in CDP. So for example, if you were to invest into Hong Kong market or US market, you will have to put it under the custodian account. You cannot put into the CDP account itself. CDP is already meant for SGX stocks. So like I mentioned, so the stocks that is purchased using a custodian itself is not under your name. Therefore, you aren't entitled to the stuff that you get, which I shared earlier, such as the voting rights and the AGMs, the invitation to AGMs. On top of which, there might be hidden fees, such as custody fees, as well as transfer fees. So if you would like to start an account that is utilizing custodian, which is have an initial lower brokerage fee, but behind the scenes, do read up on the T&Cs, the terms and conditions, to see if, let's say, there's other hidden fees that is underlying. I mean, that's something that is important to look at. So as overseas securities, I'll touch and go on this, as it's slightly complicated, where we have to, take into consideration of how other market function, as well as their tax law. But if you are interested, feel free to ask me. We can do an open discussion at the end. So for bond investing itself, before we look at bond, yes, I have said this countless of times. Bond is debt. It's a way for corporate and government to raise capital for their project, basically fundraising. So yeah, when they require something. So for example, the recent one is the SIA, where they require funds to continue their operations. They are issuing bonds and convertible bonds, as well as share split, if I remember correctly, 2 for 3. I can't remember the exact term. Yeah. So bond interest rate itself, they are inverse related. What this means is, if interest rates go up, bond price go down. But there is, I would say, more than just price adjustment itself, and I will explain more a bit with an example. So let's say if you were to purchase this bond A from company A, correct? You purchase bond A, which is issued on 2019 May. You purchase the price of $100 with an interest rate of 4% or in this case, the coupon rate of 4%. And they yield you a face value of, at the end of 10 years matured, which is the holding period, at the 10 years of the maturity, you do get a face value, which is what you're going to get at the end, the yield to maturity of $150, for example. Compare to the same exact bond that is issued today, which is also 2020 May, but given the current interest rate, basing on the market rate, the price is the same, $100, but your coupon rate right now is only 2%. So the only difference is the issuance date. That's the reason why at this current point of time, as an investor, we should see more attractive. It will definitely be the bond that is issued back last year. Therefore, you will try to see if anyone is selling it in the market, because that particular bond, even though it's the same, is yielding higher interest. So that's the slight difference. However, that is just one of the many ways you can look into this matter. So now I'll just explain a little bit the common terminology, like how this whole coupon rate, holding period, and face value a little bit more in depth. So the difference between a zero coupon bond and a coupon bond is that one gives you a yearly interest. In this case, is equivalent to the name of coupon rate itself. So both bonds will have a face value, both will have upon maturity. So it's something like the company A asks you, hey, can you lend me money and I want to start this project? Then you offer him $100. Then okay, at the end of 10 years, I promise I pay you back $150, which is considered as the face value or the yield to maturity. So using this previous example itself, let's say the bond price is 100, like I shared earlier. You do definitely get a higher, but the difference only would be the coupon rate offered. So for example, 4% and 4% and 0%. Sides from $150, you confirm get at the end of 10 years, you get an additional of 4%, which is $4 for the rest of the 10 years, which is additional of $40, for example. Yeah, that's the basic of the basic. If you have a question, we can talk about it in a bit. So comparatively to bond, we have equities here, which is equity investing. Equities have an indirect relationship to interest rate. Similarly, if interest rate were to drop, it's cheaper to invest and the stock price will definitely increase, vice versa. However, equities price and bond yields have an inverse relationship. As the lower the bond yield, the higher the attractiveness of the equity. So what does this mean essentially is, okay, we just look at the equity before we talk about bond, before we do the comparison. So for equity itself, what do I mean by if interest rate were to go down, stock price would increase? If let's say interest rate were to go down from, for example, the bank, let's say now the bank lending interest rate is maybe 1%, correct? So as an investor, I want to borrow money. Now it's cheaper for me to borrow money. I borrow at 1%, so I just have to pay back the bank 1% annually. Then I just have to find an investment instrument that is about 3-4%, or let's say, for example, 5%, right? I find an investment instrument that generates me 5% interest. So at the end of the year, after collecting this 5%, I just have to pay bank 1%. So I have a profit margin of 4%. That's the reason why when interest rate were to drop, it's more attractive to lend, thus pushing the price up. That's why when you look at the current economy, which is what's happening within the US, is their Fed rate is dropping and dropping and dropping. So they're trying to essentially boost the market, the valuation and everything. So yeah, it's like inflating the current monetary stuff and it's considered under monetary policy and stuff. So yeah, so if let's say you want to look at bonds itself, like I mentioned, so like I shared with you earlier, the difference between the issuance date, bond that is issued last year, we have a high interest rate compared to bonds. Based on the current situation, they are issuing at a lower interest rate, therefore at 2%. This lower interest rate will actually seem more attractive to investors to put their money into stocks instead of bonds. That makes sense. But if they want to invest into bonds, they have to buy a bond that have an issuance date of the last year, with a higher interest rate. Yeah, I hope I explained it pretty clear. If you are not sure, we can talk about it in Q&A. I will try my best to put it more simply. Okay, so we want to talk about the primary and secondary market as an investor. I think this is something that you have to, I would say, understand. Not necessarily use it, but it's good to know lah. So primary market is what happened. It's got to do with your IPO, which is your initial public offering. So let's say, for example, a private company like mine, maybe I want to take it public. For Kai Jun organization, private limited, I want to take it public. Correct? I want to issue shares. So the primary market will be the transaction between the company itself and the investors. So this transaction itself is considered within the primary market. So let's say, for example, as the investor, maybe I got my friend Zach out here. So maybe Zach want to purchase this company and from me. So he does this trade within the primary market. So let's say Zach decided to, so now I'm out of the picture. So Zach decided to, liquidate all his portfolio because he want to retire already. He want to spend his money, go for holiday, and he want to sell his shares. So now he need to find another investor. So this another investor, this trade that's happening is considered a secondary market. So whatever is happening, whatever you are doing in terms of buying shares and everything, you are all doing in the secondary market. So that's the first thing to know. Okay, so moving on, for lot size itself, Singapore generally one lot size, not generally, is the fact. I mean, like it is, but it is. So lot size is equivalent to 100 shares, irregardless of the price of shares. Whatever you're getting is times 100. So what does this mean is, for example, DBS share price. For example, I think last closing was about $19 plus. So if you want to buy one lot of DBS, it's equivalent to 100 times $19 is about 1.9k. But I think SIA is trading about $3 something. So for example, if you want to buy the SIA, you need to buy one lot of SIA, equivalent to 100 shares of SIA. That's 100 times $3 something, which is over $300. Then on top of the initial price that you want to buy it at, then you add on the brokerage fee, the trading fee, the clearance fee, and all the fees and stuff like that. So as an investor, I tend to keep everything. I try to keep all the brokerage fee, all these, right, to 1% of the investment value itself. Okay, so moving on. Many people have been saying this, buying low, selling high, but what does it really mean? So many people are trying to time the market. That's the first, which is a little bit unfortunate. I wouldn't have advice on that, but there are still people doing it itself. The second thing will be the fear of missing out. So upon hearing news about others, making a huge profit overnight kind of thing, resulting you foregoing your plans as a disciplined investor, allocating funds beyond your risk appetite itself. Then at the end of the day, like you do not get what you want. At the same time, you probably lose certain value in your portfolio itself, which is not something that as an investor you want to see. You want to minimize all this because money is still money to you. It will still hurt you to a certain extent. So if I can defend this statement, I think there are three things that I want to share for you to understand and for us to understand what to look at indefinitely. So do you want to understand? So the sector itself, as well as the business outlook, as well as the potential disruption that's ongoing. So example, comparatively to two different companies, Disney and AMD company, do you understand these two companies? Most of you probably know what's Disney all about, but does anyone know about AMD? So that's the thing. We got to understand the company, the business itself. Then within the particular sector, what's ongoing. So we know that Disney itself is, their revenue is reliant 40% on the parks and the theme parks out there, which is closed at this point of time. I think the only recent open one is in Hong Kong or Shanghai. I can't remember which one. Yeah. So AMD company itself is, anyway, they are doing semiconductor, but they are a good company. You can look into them as well. So the second one would be business itself, like their culture, business culture itself. How do they treat their employees, their clients, etc. Their potential outlook, their R&D department, their financial health, balance sheet, financial statement, all this kind of thing. The third one would be, does it align with your criteria, your checklist, which I talked about in the past, your checklist. So before you invest into this company, do they have any red flags that is showing? Even if just one red flag, it's very important to look into it and research and find out why everything before you put your money into it. So doesn't mean if a stock is cheap means it's good. For example, Singapore Press Holding itself is cheap, but do you want to get it? Then we got to ask ourselves, is the newspaper industry doing well or not? It doesn't look as optimistic. Reason being is, do you still see people at a commute reading newspaper? The answer, it will probably be a no at this moment, or very seldom. That's why they're trying to move forward towards something. So they got to innovate as a company. So last but not least, I think I want to touch a little bit more on balance sheet, because last week I touched on income statement. This week balance sheet, following week will be on cash flow. Yeah. So balance sheet itself is an indication of the current financial position of the condition of the organization is in, simply reflecting the assets, liabilities, shareholders, equities. So in layman terms, company owes as well as the invested amount. So of course, there's more to it than just the terms mentioned above. So to really understand the condition, it's good, to understand from the balance sheet, the respective company as what is shared on Yahoo, which I will do that in a little demo here and there. So which doesn't reflect the underlying condition of the company is facing. So to further understand, despite just relying on one source, it's good to actually read their annual report and to understand where their money is going, the flow of the cash. So for example, in the case for SIA, which I'll share in a bit, okay, by the way, I'll share these links with you guys later about the brokerage and everything. There are a lot of bloggers out there that are really doing it, so I will just share the blogs with you. So let's look at SIA. So the difference between current assets and the current and total itself is long term and short term. So current normally the short term tentatively normally is around 1 year period or so. So the net refill inventories and everything are all considered, as well as cash are all considered under current. Net refill is like what they're going to receive in the near future. So non-current assets as well as property and everything, and goodwill and intangible assets are considered under the total in terms of the long-term period. When you look at things in the long-term time frame. Similarly to liabilities, the current liabilities, debt, etc., accounts payable are all considered under the current liabilities. Whereas for the top, then followed by the total, which is on the longer time frame period. Then this is stockholders' equity, their common stocks, as well as their total liability. So to understand it deeper, let's say for example as an investor, correct, looking into SIA, when we look at the assets itself, based on the current situation, it's not as simply, for example, you look at the inventory. One very good example that I would like to share is if you look at the inventory itself, this will also consist of airplanes, spare parts, their engines, their manufacturings and everything, their machineries and stuff, as well as the jet fuel, oil and stuff. And recently we know that oil price dipped a lot. So now people are paying others money to go and manage the supply of oil itself. So as an investor, what we want to know is within this inventory, there is this thing called the jet fuel oil, and is it worth any value? Correct. So at this point in time, probably no one is going to buy oil or jet fuel oil because no one is flying. So does it really stand out as an asset? So as an investor, I'll probably minus the oil value of this total sum of $229 million, because it's in thousands. So if you want to understand deeper where the inventories all coming from and stuff like that, if you look at their annual statement, you are able to see all this, like how should I put it? Their spare part, their engines and everything. So what are their lifespan, the usage residual values and stuff like that. It all can be found within their financial statement. So as a fundamental investor, one thing is you really have to read. You have to read and understand in terms of before you decided to put your money into that particular company itself. So without further ado, I have concluded my sharing. So if let's say you got any question, you can just put it into the chat box and I'll answer them. That way everyone else we can do an open discussion so everyone can learn from each other as well. So yep, y'all can shoot away the question. Anyway, these are the references where I get all my information from. For those who are friends of my friend, y'all can follow me on my Instagram. Now I'll just update accordingly regarding every Tuesday, the details and stuff like that. So if y'all got a question, you can ask me through there as well. Yep. Any questions so far? Most welcome. I hope it's beneficial, and I hope I did manage to bring the point across in a much easy and understanding manner. Nice, amazing. Yeah, no problem. If you guys got no question, shall we conclude this session? Okay, I guess so. Anyway, if let's say, for example, okay, I'm actually planning out for all the webinars for the next month itself. So if let's say y'all got any question, I'll say any feedback with regards to the topics that you want me to cover on, do let me know. I'll look into it and do my necessary research in it as well. Then we can share all these with everyone else as well. So for next week topic itself will be on debt evaluation. I will go into I'll be talking a little bit more about how I do my evaluation of a particular company. Yes, I did it last month in terms of valuation of company, but that's more on the surface. So I will go a little bit more in depth in terms of understanding, such as like identifying from their balance sheet why I feel SIA, for example, the inventory itself, we should not take it as the face value. We should not take the 229 million, for example, because it comprises of oil, which no one's going to buy. It comprises of mechanics, parts, that no one is going to get it at this point in time, at least in the near future. So considering that as an asset, I will say as an investor myself, I wouldn't consider it as an asset. That's one example, and I'll share a little bit more next week. No, bro, I don't time the market. But thanks for asking. So yeah, so continuing from what I'm sharing is for next week itself, I will share a little bit more in depth in terms of how I evaluate a company, the things that I actually look for, and probably share a little bit on the checklist that I emphasize a lot. Like what do you look for in a company, or a company within a certain industry. So because different industry have different way of evaluating it. No part 2 for today. I try to keep it short because based on experience, I'm trying to come out with a session whereby I will do it on a money basis with regard to the stock that I choose on, which is what I did on the first week of this month, which I think it happened on a Friday. So I'm not sure how many, I think there's over 30 people that turn up. Yeah. So if you all want, if you all feel that the session previously did was informative, I can continue it. Yeah, I'm working on it. Yeah, no problem. So yeah, so answering your question, Zach, yeah, I'm working on it to hopefully do it on a monthly basis. Yeah, cause I still got upcoming exams. Probably after that I will do it more often. But I got no money to invest for now. I'm still a student. Trying to save here a little here and there, and got school fees to pay. For your stocks for selling point and target price. Okay, Josiah. Yeah, okay. Yeah, no problem. If possible, I will hold for my lifetime. Not the entire lifetime lah. Probably when I'm 60, 70, I need the money. I'll probably go and retire and travel around the world. But what I'm essentially saying is, I do hold for a long period until maybe there's red flags indicating that this company is no longer how they are. For example, the change of management, it doesn't align with my values to a certain extent. Because I'm a fundamental, so I really look things from a very in-depth perspective. Yeah, I don't go based on trend like it's a hot stock, for example, Netflix kind of thing. I'm not saying Netflix is not a good company, but I'm saying like I need to do my research into understanding how the corporate governance, how is it being run, how do they treat the employees and everything, because it really matters in the long run. It's a good company, will definitely do well in the future. So your SL, I know TP lah, target price. I don't have a target price, but once I find that it's below fair value basing on maybe a few ratios, such as like PE, PB, current ratios and stuff like that, which I'll be share a little bit more about it next week. Then I'll purchase that particular stock. And given the current, for example, given the current time, like at this point of time, it's a little bit volatile. So I'll probably average in instead of lump sum. So if I were to be, if let's say I am who I am last year, where the market is a bit more stable, I'll probably lump sum in. Yeah. I hope I answered your question. Yeah. Yes, Kunyang Regis. Commercial REITs in China. Commercial REITs in China, there's a lot of REITs out there. I personally invested into one. I think many of y'all will probably know. There's only a few REITs out there that's invested in China, like Capital China, Sager REITs. I think these are the two that is more notable. REITs in China, I think the thing you have to look at, because we cannot be there personally. Like for example, if I invested in Escort, like which I did, I'm able to go down to their hotels, their shopping centers, to have a look what's the condition like. But in China case, you cannot go there. So the only thing is you need to research and really rely on it. So you want to see who is I would say their auditor. For example, who's their trustee in Singapore, right? Which bank are they partnering with? You want to look at what does the more main tenants about, like are they like for luxury brands, who do they cater to, like the low, medium or upper class kind of thing. So that's something that you have to look into, and their tenant lease structure. So in the case for Parkway Life REITs, which I invested prior, their lease structure is pretty amazing. They do how should I put this? their list will never decrease. It will only maintain or go up. And they have an annual, they got a timely period. I believe it was annual. I can't remember the numbers. But yeah, they do have a timely period of rental revisions. Yeah, and the occupancy rate is pretty high. I think 99.7%. I shared about it 2 weeks back during a stock pitch sharing session together with my friends. So I'll probably organize one either end of the month or within the following month itself. So yeah, hopefully I answer your question, Nick. It's pretty even. It's pretty evenly distributed. So I got in the healthcare. I got it in the REITs, hospitality REITs, which is Escort. Healthcare is Parkway Life, which I discussed upon. They are not doing real estate. They are actually doing within the healthcare sector. Banking and finance industry. I very open. I invested in OCBC. The other one is Asia, which is China, which I think is considered my more riskier stock itself. Yeah, Parkway Life REITs. Hi, Ba. Yeah, oil sector in Singapore itself, net export. Surprisingly, we are doing. I would say we are doing okay. I won't say we are doing very well, but I think we are doing quite okay in the Singapore sector itself. I mean, this is based on the news that I have read on. Yes, there are, I think, a lot of tankers that is waiting out there for people to claim to buy and everything. The main thing I will feel is because Singapore, we do refineries, and we are one of the largest exporter of refined oil to within the Southeast Asia region. So I think in this case, Singapore wouldn't be affected as much. Actually, more or less, we will actually, I would say, we'll be able to do decently well. I won't say very well, because the price isn't as attractive as in the past, because he has dipped so much. So yeah. So that's my understanding. So I hope I answer your question. Yeah. So I think we export mainly to Hong Kong, Vietnam, and as well as other parts. Yeah, and the numbers are looking pretty healthy, basing on trading economics. Yeah. Okay, sorry about it. I will actually share this brokerage website. So for those who want to start investing and everything, you all can look into this brokerage website. As easy in the chat. So for those who hasn't opened the chat, is I share the link in the chat itself. Unfortunately, I don't do technical trading. So if you want to have a view of technical analysis and everything, I can hook you up with a friend. He's doing technical as well. So yeah, no technical for me. I cannot answer that question. Okay, I think we shall end it off for today. Hope everyone stays safe. For those who is still in Singapore, phase 1 is coming out. Do stay safe. Hope everyone is good to go. Yeah, I don't know lah. But yeah, all I say is thank you for your time. Hope you all have a great week ahead before I see you guys next week. With regards to the next topic that I'm going to cover on. Yeah. If not, if you all have any question along the week, just feel free to PM me, DM me. We can do a discussion, and maybe we can cover it on next week so everyone can share as well. No problem. If not, thank you, and have a great week ahead.